Welcome back to the deep dive. Today we're really on a mission. We're trying to accelerate your knowledge on a topic that often gets just buried under speculation and noise.
So much noise.
We're talking about Ripple, XRP, and its actual fundamental role.
We're pulling from Ripple's own leadership, Brad Garlinghouse, Monica Long, but also, and this is key, from institutional titans. Think Franklin Templeton and BNY Mellon.
Exactly. So the goal here is to cut right through that daily market chatter. And Brad Garlinghouse, the CEO, he put out this post that just perfectly captures it. He said calling their success last year successful was like calling Tom Brady just a great quarterback.
It's a massive understatement is what he's saying.
It's a huge understatement. And that kind of confidence, to me, it suggests something historic has been happening, way outside the headlines.
It absolutely does. They're essentially moving the goalpost for what success even means in this industry. It's not just about cool tech anymore.
Oh.
Now it's about building this regulatory fortress, the licensed, compliant rails that big money actually needs before they can even touch this stuff.
Okay, let's unpack that. Let's start with that execution piece, the strategic expansion. Garlinghouse said they're firing on all cylinders.
Yeah, and the sources point to two major acquisitions that seem to be accelerating this whole Internet of Value vision.
All right, they bought Ripple Prime and G Treasury.
Exactly, and the sources say these buys greatly accelerate and expand their operational scope. If the big vision is this Internet of Value, then these are the pieces you need to actually service huge, established corporate clients.
Wait, let's break that down. What did they actually buy in terms of function? Because when I hear treasury management, it just sounds like, boring back office stuff. How does that accelerate anything?
That is a great question, and it's actually the whole point. It's all about bridging the gap between old finance and new finance seamlessly.
Okay.
So Ripple Prime gives them enterprise-level crypto custody trading. It's the secure on-ramp for institutions to hold and manage these assets.
Right.
And then G Treasury offers corporate treasury management solutions. Mm-hmm. Think about it this way. A massive company needs professional tools to manage billions of dollars in dozens of countries, all while staying compliant.
Of course.
By integrating G Treasury, Ripple is embedding its services directly into the software those corporations are already using for their day-to-day cash management.
Oh, I see. So the corporate treasurer doesn't even have to leave their existing software to use XRP or their new stablecoin.
Precisely. It makes it an incredibly easy plugin for global commerce. And Garlinghouse was clear. He said XRP has been and will continue to be the heartbeat of that vision. It's the thread connecting everything.
And that connects to the regulatory side, right? Their focus on getting licenses seems relentless. They want the most comprehensive licensing portfolio.
Yes, and that UK EMI license is the perfect example of this strategy in action.
So what does the electronic money institution license, what does that actually let them do in the UK?
It's foundational. It's a stamp from the regulators that says Ripple can legally act as a financial intermediary for electronic money.
So digital assets.
Digital assets, digital currencies, yeah. Monica Long was excited because it lets them build regulated enterprise-to-enterprise or E2E infrastructure. They can legally handle everything, moving it, trading it, on-ramping, off-ramping, for any UK business trading globally.
And that's where the real competitive advantage kicks in, isn't it? Any UK company using this gets a massive edge.
A massive edge. The sources spell it out. Using their stablecoin, RLUSD or XRP, they can move huge sums of money in 3 to 5 seconds.
3 to 5 seconds.
And they can cut their costs by 60 to 90% compared to what they were paying before.
60 to 90%. That kind of efficiency, I mean, the sources call it a digital arms race.
That's what it is, because once one big player in, say, the medical supply industry gets that kind of speed and cost saving, what do their rivals do?
They have to follow. They have no choice if they want to stay competitive.
They're forced to follow just to maintain their profit margins. It turns digital assets from, a speculative toy into an essential business tool.
And it's not easy to get this legitimacy.
Yeah.
The UK's Financial Conduct Authority, the FCA, they are notoriously strict.
Extremely. The source said they denied 9 out of every 10 companies that applied for these licenses in 2024. So the fact that Ripple got through that gauntlet, it's a profound signal to the market about their compliance and, frankly, their staying power.
And you can already see the network effects starting. Right?
We are. The sources mentioned 2 other big firms, Hidden Road Partners and ARX. They're already leveraging the XRP ledger and are also registered with the FCA. And Ripple is planning to use this to scale RLUSD with Hidden Road as collateral.
This isn't just a white paper then. This is real high-level institutional stuff happening right now.
Active collaboration, yes.
It's just wild that they need this fortress of compliance just to compete with a system that is, it's archaic.
Right.
Which brings us to the core problem they're solving. What is so wrong with the plumbing of global money today?
The problem is that the entire system runs on technology that is literally older than the internet. It's so slow, it's ridiculously expensive, and it's completely opaque.
Right. When you send money overseas, it's not one single transaction.
No, it's bouncing between a long chain of correspondent banks, these middlemen who don't trust each other, and every single step adds delay and it adds fees.
Most people, especially here in the US, we just assume money moves instantly. But that's just an illusion the bank creates.
It's an illusion. The friction is hidden from you. But if you're a global corporation trying to buy inventory or pay suppliers, that friction represents enormous costs.
So fixing this isn't about a new app.
No, it's not about an app. It's about rebuilding the infrastructure from the ground up. And that's why the analogy in the sources is so good. Ripple is building the plumbing of global money.
It's not the faucet. It's the pipes. The interstate highway system for value.
It's the rails. And it's the trust layer that connects thousands of banks, payment providers, institutions, all moving real-world money for things that matter. For trade, for oil, for food.
And for that to work globally, you need something special. A neutral bridge asset.
You do. And that is the specific, non-speculative role of XRP.
It's fast, it's liquid.
And critically, it's not controlled by any one country. Plus, because Ripple, and this was deliberate, faced regulation head-on and survived, it now operates with a legal clarity that almost no one else has.
That clarity is the asset.
That clarity is the asset that institutions are really buying into. It lets Ripple sit as this neutral, regulated trust layer for governments and banks to use.
Okay, that clarity is vital, but we have to be honest with everyone listening. There's often this deep frustration with XRP's price action. It just doesn't seem to reflect any of this massive institutional progress.
No, it doesn't. And the sources hit this head on.
They do. There's a quote, XRP isn't broken and isn't underperforming by accident.
It's a very pointed quote. The argument is that most people are viewing it through the completely wrong lens.
So what's the right lens?
The right lens is necessity, not speculation. XRP was built to settle value when the old systems can't do it or can't do it cheaply and quickly enough. It was never designed to move with, crypto height cycles.
But everything seems to move with those cycles, with the dollar, with liquidity.
Right now, it does. Because the massive pools of liquidity that drive global trade, they still flow primarily through the dollar and through deep debt markets. Until the volume of actual settlement using XRP becomes its own overwhelming force, it has to reflect the risk cycles of the system it operates within.
So even if millions more people start to believe in the mission, that's not the trigger for a decoupling.
Correct. The sources are very clear on this. Decoupling doesn't happen when sentiment improves. It happens when settlement becomes necessary.
When the old plumbing is under so much pressure that it starts to break.
Exactly. That's when necessity shows up. So the conclusion is XRP doesn't need belief. It needs demand. Real, fundamental demand.
And this is where the institutional validation becomes so powerful because it shows the big players are preparing for that shift. Let's look at BNY Mellon.
Right. BNY Mellon, managing trillions. They just expanded their digital cash capabilities. They can now create an on-chain mirror representation of client deposits.
Okay, simplify that for us. On-chain mirror representation, what does that mean?
It means they can take the real dollars their clients have deposited in the bank and turn them into digital tokens on a blockchain.
So they're turning slow money into fast money.
That's it. They're turning a traditional bank liability into an instantly movable digital asset. It's them saying, okay, our systems are now ready to connect to these new rails. They're ready for things like RLUSD and XRP.
And then you have the Franklin Templeton endorsement. This is the detail for me that you just cannot ignore.
It's probably the most powerful signal in all the source material.
Sandy Call, their head of innovation, at a $1.7 trillion asset manager, confirmed they've been working with Ripple for years, even during the peak of the U.S. lawsuit.
Think about that. While Ripple was fighting for its life in the U.S., one of the biggest asset managers in the world was still building with them.
It's incredible. It proves they saw Ripple and XRP as essential global infrastructure, period. The value of the plumbing was more important than a temporary legal battle in one country.
And Sandy Call wasn't just talking about the past. She was pointing to the future. She said, we're moving beyond stablecoins being the main event.
Right. towards what she called a universal liquidity layer.
A universal liquidity layer built on these new rails. The goal is to let investors on-chain optimize their liquidity across all kinds of different assets to maximize their buying power. It's about making money itself functionally smarter.
And she even predicted it would bring in totally new asset classes. She mentioned intellectual property being added to standard investment portfolios.
The entire scope of what's considered an investable asset is about to change because these rails are being built.
Okay, before we wrap up, we have to touch on that little piece of technical analysis in the sources, the altcoin God signal.
Right. We have to be really clear what this is. It's looking at a momentum indicator, the JFS oscillator, on a very specific chart, the total 2 to Bitcoin chart.
And what is that chart actually measuring?
So total 2 is the total market cap of all crypto, but excluding Bitcoin and Ethereum. So the chart basically tracks the strength of the rest of the market, the altcoins, relative to Bitcoin.
And the observation is that the momentum is way up, but the price itself is lagging behind.
Exactly. It's a bullish divergence. It looks a lot like the setup we saw right before the huge alt season back in 2020 and 2021.
But, and this is a big but, we have to connect this back to the core argument.
Yes, we do. While that signal is a nice tailwind for the whole asset class, the source's caution is not a direct trigger for XRP specifically.
Right.
XRP's performance will still come down to its own fundamentals. The actual on-chain settlement volume, new partnerships, more licenses. It's substance over speculation. That's the whole theme.
So if we bring this all together, what's the final takeaway for someone listening?
I think the key takeaway is that Ripple isn't positioning itself as just another fintech company or a bank competitor. It's positioning itself as the underlying infrastructure, the plumbing that the entire next generation of global finance will be built on.
It's about cheaper payments, faster trade,
and an honest, transparent system that institutions can finally trust. They are building the infrastructure that will be non-negotiable when, not if, the old systems become too slow and inefficient to support the global economy.
The sources show this clear, unwavering institutional preference for regulated, neutral infrastructure.
Yeah.
It's already built. It's ready. So if necessity really is the driver, as all this suggests, then the final question you really need to think about is this.
What's the catalyst?
What specific global financial pressure point? Is it currency instability? Is it a major trade war? Or some catastrophic failure in the old legacy system? What is the event that forces everyone overnight to adopt the digital rails that are already in place and waiting?
That is an excellent thought to end on. Thanks for digging into these sources with me. This was a great deep dive.
Always a pleasure. We'll see you next time.